Cool. All right. So let me start by thanking everybody for coming on today, giving up their valuable time, private time and family time to be on a webinar. As I've said on several of the other webinars we've been having recently, it's very dynamic and challenging times at the moment. And what we're trying to do through these webinars is give everyone out there some general knowledge about all the measures available. And the first two webinars we had being last week, Wednesday, and Monday this week, were all about what government options there were in relation from the tax office and the government themselves to try and free up some cash. And tonight's webinar is all about what financing options there are to free up some cash. And I'm then going to cover the job, pardon me, I get it the wrong way around, Jobkeeper payment. And Catherine's also going to come on and talk about some super things you can get through super potentially. And then we'll summarise at the other end of this. So to start with, I'd like to introduce Melissa Mann, and her business is Thinking Big Finance. She's been a client of ours for a long time, and more importantly, she's been our own personal broker for a long, long time. I don't know how long, Melissa. It's at least 10 plus years. I don't know how long it is. You might think too long, but you've been our personal broker for a very, very long time, and also you do a lot of great work for a lot of our clients. And Melissa herself is an investor, passionate investor, and understands all the nuances with business finance, super finance, and property finance, and understands all of the tricks of the trade to try and get as much finance as you can. So Melissa's kindly offered to come on and talk to us about the stimulus options available through the finance system. So if you just bear with me, I'll pass over to Melissa. I've got the PowerPoint at my end, guys. So just understand that when she tells me to move forward, I'll be moving the slides forward. So it's all on the one webinar. So
she gets to tell you what to do.
Yeah, I'm used to that. I work with a lot of people. They all tell me what to do, but doesn't mean I'll listen, but that's another story. So I'll hand over to you, Melissa.
Thank you, Adrian. I appreciate you obviously putting all this together for your database, as well as everyone out there who's just seeking some answers on what to do at the moment. There's, there's so many different things that have been announced with the government, and it's a bit daunting trying to navigate through it all, figure out what the best option is and whatnot. So I don't have all the answers, but I certainly know a bit of what's going on and what is available. So hopefully I can answer any questions at the end. If not, I'm more than happy to, chat to anyone who needs any help one-on-one. That's fine. So a little bit about myself. I started Thinking Big Finance back in 2008. So I've been a broker since 2006. And I think Adrian and I started working together pretty much when I started working when I opened Thinking Big Finance. I think it might have even been maybe 6 months or so before that. So we have been working together for numerous years, both professionally and personally. I think we both think the same. That's why we get along so well, I suppose. So I guess I love what I do, and I'm an active property investor, and I just love showing people on ways of getting around the banks, which is the hardest part when it comes to that sort of stuff. I'm based in Queensland. I'm a young mum. I've got my kids at home with me at the moment, thanks to this virus that's going around. So I'm trying to run a business as well as, be a working stay-at-home mum. So that has its challenges, but again, we're navigating through it. Everyone's in the same boat. So I think we all just need to stick together and get through it. But look, that's enough about me. If you can click to the next slide, please. So I guess I just wanted to cover off on the $250,000 business loan scheme that the government's introduced. I've got a bit of info around it. Obviously, it's quite a new scheme, but I've put together something on the next slide, which we'll talk about. There's also some state-based schemes currently available that some people may or may not know of. So I've sort of collated some info about that sort of stuff. Also deferring loan payments with current lenders and how you would go about that. And also any other options that you may not have thought of that you could be basically looking at to increase your cash flow now. So I'll do my best with this one. Basically, the government's introduced this unsecured $250,000 business loan. So as far as I'm aware, most of the majors are on board with this, and it is like a 3-year term up to $250,000 max lending. So 3 years, 6 months of that, you can defer the repayments. So basically the interest is capitalized in the first 6 months, giving you 2.5 years then to pay out that loan. So it may be an expensive option depending on obviously the business cash flow and how much you borrow. But I guess it could be a good option just to get through the next however many years, basically, if you own a business. So it has to be a business based in Australia, registered and operating in Australia. It only can be used for business purposes. It cannot be used for, I guess, paying out debts or refinancing debts. It can only sort of be used for paying wages, rates, upcoming cash flow, all that sort of stuff, just to keep staff on, basically. As well as buying stock potentially and just keeping your business going. So it's for small to medium businesses with the turnover less than 50 million, which a lot of, I guess, small businesses fall under that bracket. You cannot apply for multiple loans with multiple lenders. So basically, if you apply for a Westpac one, you can't go to CBA the next day and ask them for another 250,000. It just doesn't work that way. For one, they will know about it because it will be noted on your credit file, no doubt. So that's just a way of, I guess, keeping that funding open for every business rather than, you know, one business going to 4 different banks. And it's for new and existing customers of the bank. So you don't need to have a relationship with your particular bank. In my opinion, it probably would help if you did, because you've got a bit of an established relationship there. They're going to know your business bank's transactions, everything like that. But also that might also go against you, I suppose. So and again, I don't really know what the policy is on how much you can lend and exactly what they're looking for. But realistically, they all have the same documents needed. So I'm assuming they've got like a way of figuring out how much your business can borrow in the background. The NAB rate I'm aware of is 4.5%, and there's no application and loan service fees on that one. I actually heard from Westpac today, and I haven't had a chance to update these slides, but their rate is sitting at around the 7% mark. So it is quite high. Yeah, it is a high rate. So look, I think the NAB's coming up trumps. I'm not sure what the CBA rate is. They haven't stipulated what their rate is, and I'm not even sure if ANZ are actually offering this one just yet. So in saying that, my inbox is coming through thick and fast. I've received that many emails in the last basically week. So I guess as things progress, I could probably update Adrian and we can send out some more info on it, I guess, at a later date. So basically the documents that you need are pretty much in line with what you would normally need for a business loan with a lender. So last 2 years financial statements and tax returns, your last 4 BAS statements, just showing, I guess, your your gross sales and your capital expenses, and then your ATO portals as well, just to confirm where you're at with your tax liabilities, because I think the last thing these loans are going to be designed for is to pay tax debt. So they just want to make sure that you're not going to be, I guess, using this money to confirm your tax liabilities. So lastly, how to apply for these types of loans? You can actually email your bank direct, or you can go through your dedicated business banker. I must admit though, I wouldn't be surprised, a lot of brokers don't particularly want to be doing these loans for clients. And the reason I say that is because the banks have said they're not going to be paying broker commissions on them. So I guess depending on the relationship you have with your broker, I guess, and depending on how busy they are, they might be able to do this for you and obviously not get paid for it. or you might be able to just go directly to your bank and organise it with them. So that's pretty much what I've found out about this loan.
Can I butt in now and ask some questions,
Yeah.
please? I'm probably going to ask questions that everyone's thinking anyway, so I'm going to take over for a bit and ask a lot of questions. In relation to general eligibility, you know how it's getting harder and harder when you get to a certain amount of debt, etc., with businesses to get loans. Have you been given any sort of feel as to whether they're, because it's unsecured, but because it's 50% guaranteed by the government and 50% guaranteed by the banks, whether it's going to be easier or harder with this to actually access these facilities?
The only thing I do know is that, and I was going to talk about it in the next slide, was there's a Queensland government business loan they've introduced, and they're actually going to be basically calculating it on the basis that 50% of the eligible entity's annual wage expense to a maximum of 250,000.
You want to go for this, Melissa, and then I'll come back and ask my question?
Yeah, but I think the thing is, because this one here I'm about to talk about is the Queensland government one, not the Australian government one, which we sort of just were talking about. So
let's go back, because this will only benefit Queensland residents, won't it, effectively?
Business owners, yes.
Yes, so that's what I meant. Sorry, that's what I meant. Let me just go back and ask some Australia-wide questions then. So you're not sure, and I know from what you explained to me the other day, the banks are only just starting to educate their staff on these loans and just starting to roll them out. So I'm tipping there's going to be a lot of unknown factors with all of this in the next month or two. But as far as your knowledge is, you don't obviously know whether the criteria are going to be harder or slightly easier, given the nature and given that it's designed to cover business shortfalls effectively. And I was hoping they might be slightly easier than normal to access these funds, but who knows with the banks.
Yeah.
But in relation to what it can pay, from what you said, you mentioned wages, but I would assume other overheads like rent and electricity and you know, other bits and pieces, as you mentioned, stock. And I get that that's not designed to cover tax payments, because I totally get that. But I would assume it would be also for all normal business overheads that you would normally be funding and paying through your business income.
Yeah, absolutely. As far as I'm aware, that's exactly what it's designed for, just to keep that business going and paying your normal. I guess there could be a slump in cash flow coming, you know, for the next 6 months with businesses not bringing in any revenue. So I guess it's just to prop that up, to keep the business going, to keep the staff, to keep paying rent. Basically, that's what it's going to be designed for. I guess I tried to get my CBA banker onto this webinar, but he was only doing training on this today.
Oh,
so
wow. It's the end of March and they're just on the train.
A lot of, and this is the thing, a lot of the lenders, and again, I tried Westpac, my banker at Westpac, and same thing, they just have not been trained on how to, I guess, process these applications, because it's really only been rolled out over the last week. So I feel like over the next week or two, we might need to redo this webinar, and, you know, I'll probably have a bit more information about it all then.
I think that's a good idea, and we'd already earmarked that as well. The only other final question I had for you, with these types of loans, are they the sort of loan that you draw down what you need when you need it, like a line of credit? So effectively, you're only going to pay interest on what you've used? Because I can't imagine people are going to want to draw down $250 straight off the bat if they don't need $250 straight off the bat. So
yeah, look, I don't think that that's going to be the case, because it is a term loan. It's not a line of credit. So it is going to be a 3-year term loan, and with interest deferred over the first 6 months.
So it will be a full drawdown.
Yes, yep. So I guess I did some quick figures today, and based upon like the 250 over 3 years on the NAB rate at 4.5%, you would be looking at close to $7,500 per month in repayment.
Yep.
So over a 2-year term, it would be close to $1,100 per month. So
I've got a couple of questions here, Melissa. Someone's asked, what about capital investments for the business? So, you know, like assets and bits and pieces that the business needs to buy.
I don't think that is that's why they've actually, the 150 tax write-off that they've introduced. From what I read today, this particular loan here is not to purchase assets, But again, that could all change. I'm not 100% sure
Okay.
if that will change.
I guess it's very fluid at the moment, like everything in this space. Like the last 2 weeks for us has just been a blur, and I think the next week is going to be something similar. But in this space, I would imagine it's going to be really moving at fast pace in the next, because at the end of the day, and the next question I'll answer now, these loans are only going to be available till the end of September, which is 6 months' time. Now, if they take another month to really roll these babies out, that gives everyone 5 months. So at the end of the day, people are going to have to move pretty quickly on this if they want to do it, because there's still going to be time to assess it and put in all your docs and all that sort of stuff. And the other thing, a question I have in this space.
Can I ask a question there? Just how long is the turnaround time usually, Melissa, for a loan to get through?
A business loan?
Yeah, a business loan.
Generally speaking, anywhere between a week to maybe 3 weeks, but given the current climate, look, I've got banks that have got 28 days before they even pick up an application. So
Wow.
They're getting hammered.
Yeah. Absolutely. And I feel, just going back to that first question though, if I guess someone's chasing finance to purchase business assets, there's still lending options out there like there always is with normal sort of equipment finance, chattel mortgages, that sort of stuff. So a business loan, I guess, will generally attract a higher rate, especially because it's unsecured. You might be able to do a secured loan against that asset you want to that you want to purchase at a lower rate. So it might make sense to actually do that.
And that person who's asked that, they're a client of ours. So we're happy to have a chat with you one-on-one about that to actually streamline that decision and help you through that. But the other thing that's blown my head with this is 4.5% and 7% of the two rates, that's a hell of a disparity. Like that's a 50% higher interest rate that Westpac have come out with versus NAB. God, that's amazing with the same climate, with the same terms and conditions, that they can jack their interest up 50%.
Would they be likely to change now that they've seen that Westpac's...
Or the other way around, or Westpac come down?
Yeah, look, the major banks generally love, playing off between each other. So I would not be surprised if that happens. And CBA, as I said, I'm not even sure what their rate is at the moment. And if ANZ come into that space, I guess I'm assuming they would. Yep. Again, they could all be, they might be all the same by the end of the day, or I really don't know, I suppose. But just bear in mind that Westpac went through, I guess, the ringer, so to speak, when they went through the Royal Commission. They were heavily fined and everything like that. Yes. So I'm not surprised that their rate is a little bit higher. Yep. But again, that could all change.
Yeah, I've got a couple more questions, Melissa. One from me and then one from someone else on the call. In relation to this, if you've got other trusts with rental properties and bits and pieces, because a lot of our clients do, when you normally get finance, they factor the whole damn thing in with everything. With this, are they only going to look at business stuff, or are they going to look at everything?
From what I've had a discussion with the Westpac banker this week, they will generally just look at the business and look at the business turnovers, not anything personal. So
they're going to look at really what they're looking for, because they know that with some businesses, they're going to be zero income now for probably 3 to 6 months, right? And anywhere between 0 and 100, right? Now, they're going to look at the last 2 years because they'll see at least the track record and continuity and consistency. And that's what they're obviously going to be chasing by looking at the financials, BASs and portals and all that sort of stuff.
Yeah, I guess with a general business loan, that's what they will always look at, historical figures, not what the next 6 months is going to bring in, so to speak. Yep. And of course, it's probably going to come down to industry as well. And, I guess there's a couple of lenders in the residential space that are not lending to certain industries at the moment. Like for normal home loans and investment loans. So yeah, look, I feel like if the client's got the last 2 years tax, BAS statements, even a profit and loss up until now, like that's certainly going to have, that's going to have, effect on what you can borrow.
One other question with this, if you have to take the full 250 up front, what happens, for instance, say you don't think you're going to need that and you might only think you need 100 or whatever. If you want to pay the balance straight back off the loan, I imagine once you've done that, that's what you're left with, whatever you've taken, and you won't be able to get it back again once you've paid it back, I would assume, in this space. Is that how these things normally work?
Redraw, do you mean?
So no, yeah. So for instance, say you have to draw the 250 straight up, but you look at the next 6 months and you go, look, I probably only really need 100, right? Can you put the 150 back in? And if, once you do that, I'm assuming you're stuck and you've only got the 100. If things went awry, you're then stuck. I guess that's my two-pronged question.
Yeah, look, generally speaking, with a business loan, as far as I'm aware, you can't redraw that money back out. But I guess it's like a contract as well. So I'm assuming if you do pay it back earlier, you might be stung with interest costs and break fees and whatnot. So that's one thing I did ask the bankers about, and they just couldn't answer the question for me, unfortunately. So again, I'll probably have more info on it once they have done their training, so to speak.
And look, as you mentioned before, we'd already thought about this too. We might do a quick webinar, update webinar in 2 or 3 weeks' time when you've got a lot more stability and you can give some clarity around some of those things that are moving at a million miles an hour. I've got one other question here, which is a really good one. Sounds like this process will take a while. Would you recommend going for a secured loan and putting assets up and getting it done quicker versus this?
Yeah, I guess depending on the asset too. Like we can turn around sort of your standard equipment finance in a matter of a few days. So generally speaking, when you're buying an asset, you can secure that asset. So the bank will even just want an account and income declaration or a trading account for that particular month. So I suppose it's a lot easier and quicker to get
and you can have redraws, finance. And you can have offsets and redraws and those sorts of things as well.
Oh, sorry, I missed that bit.
If it's resi, you can also have offsets and redraws and those types of things. So if you don't want, and you might not want 250, you might only want 100. So you're not forced to take 250. You know, a more practical option might be to get a residential loan with, I know we're going to come to this in a minute. We're going to come to this later on, but it might be a more practical option too, depending on individual circumstances. And like everything we're covering today is very generic. And literally no one should be taking any action on anything without speaking to Melissa about finance or me about the tax side and the stimulus side to make sure that we streamline these decisions to suit you and your particular circumstances. That's crucial. And the last thing I've got, and then we'll move on. Someone's mentioned that they've got a business credit facility with ANZ, and they've said they could extend the credit facility by 10% without much of a stress. And you know, those types of things might be more practical than this 250 as well. And I'll take your opinion on that, Melissa. That's your space.
Yeah, absolutely. And I feel like, you know, lenders are willing to work with people in this sort of climate. So if they can do that and they can do that more, you know, quickly, it could definitely be the best option, I suppose, especially if you need that money and need it fast. But I guess that having that right advice and speaking to the right people is certainly the best thing to do, and not listening to, you know, people out there that are not in the industry, because, you know, they might have had a loan knocked back, but the thing is their situation could be completely different to the next person. So yeah, look, definitely speaking to people who know what they're doing is some good advice.
Cool. Thanks. I'll move on now. Thanks guys for the questions. We'll get on to the Queensland loan. So for you Queensland business owners, this looks like a damn good product.
Absolutely. I came across this, and my Westpac banker actually sent me the link on this. So I didn't know about it. And then she basically said, look, this could be a better option for Queensland business owners. So I don't know if any other state is going to be introducing something like this, but at the moment, Queensland is the only state. So you need to have a Queensland business, and basically based in Queensland. So they're again offering up to $250,000 for working capital only, paying rates, stock, rent, wages, stuff like that. So loans up to 100 grand are unsecured. So I guess anything above that, the bank will just take a general security, I guess, a charge over the business assets of that particular entity that's actually borrowing the money. So the good thing about this loan is that the first 12 months will be repayment and interest free. So the rate is only 2.5%, and years 2 and 3 are interest only. So this loan is a 10-year loan term. Again, just quick figures, I've quickly worked out 100 grand over 10 years at 2.5% roughly works out to be about $945 a month. So I think something like this would be quite achievable for, you know, from a cash flow point of view. Again, it's not a line of credit. As far as I'm aware, it's just a term loan only available for Queensland businesses. So the thing is, the business itself would need to be affected by, obviously, the virus that's going around. You might also need to prove that you've had possibly, you've had to lay staff off or whatever it might be. You might need to put together a bit of a business plan, so to speak. So look, that's all I know about it. There's actually a lot of info on this. There's about 40 questions and answers on their website, and I can send anyone the link for that. So I was reading through it today and it was just way too much to go through in a webinar. But a lot of the questions I had were actually answered by it. So that's all I know about that one. Now, as for other states, as I said, I don't think there's anything that's been rolled out yet, and I'm not sure if there will be regarding something like this for other states. But in the ACT, there was, I tried to click on their website later on, earlier today, and it went to some other website, and there was no information whatsoever I could find on ACT grants or loans. I believe New South Wales has only got a payroll tax waiver. There's no sort of loans available like this. WA, it looks like there's a grant for small business up to $17,500 at a one-off payment. Victoria, there was a $10,000 per business, providing that business employs staff. I'm not sure if you've got any more info on that one, Adrian.
Not yet, no. That's not something we've concentrated on, the big ticket items that we haven't got yet. But that's something we'll look into a bit more.
Yeah, well, that was all I could really find regarding other states today. And again, this could all change, but I thought this Queensland loan is certainly a fantastic option. If you go to the next slide.
Hang on 2 seconds before we do. I don't know if you said this or not, but the maximum loan amount is 50% of the annual wage expense up to a maximum of $250K. So I don't know if you mentioned that or not, but I tell you right now, this looks like a damn good loan potentially for people to consider. The interest rate, the flexibility, no interest, and then interest only for 3 years. Come on, Victoria, pull your finger out, I say. I've already had some people say, can we change address?
ABN address.
I actually thought about that question today, and I thought, I wonder if there's a way that can be done, but I don't know. I'm assuming that, yeah, the business and everything needs to be registered in Australia. So, but this is what they asked for with this particular loan. And again, I've pretty much just copied this off the website. It's again all the same stuff you would normally apply for a loan. So any normal bank would want to see this sort of stuff, being your tax returns, financial statements, bank account information. I'm assuming that's bank statements maybe for the last 6 months. The ATO portals just to show you tax liability status. What you currently owe and what you still need to pay out there at time of application. ID and all the trust deed and stuff like that, which is pretty standard. So the thing is about this one, it is open until September, but if it's 500 million that's been actually allocated, and that could be exhausted pretty quickly if a lot of businesses jump on it. So it's basically up until September or when they run out of funding.
I reckon, given how good that product is, I'd be staggered if it doesn't go quick.
Absolutely. The only way you can apply for this is at that website link that I've popped on there.
Cool. Now, a question here is, with wages, does that include owner drawings? And I'll answer that question subject to Melissa clarifying. I would assume they'll look at gross wages that's declared on tax returns and paid out of businesses, and drawings won't be ultimately factored in, I would assume, Melissa?
Yes, from what I've read this week, yes, it's still, if the owner takes a wage, yes, that's incorporated into it.
Well, so the person who's asked this lives in Queensland. She said it takes into account owner drawings. So maybe that's something you can have a look at for us and give us an update on that, Melissa, because the person who sent this, I know, lives in Queensland, and she's saying it takes into account owners' drawings. But be interesting to see how it does that, because nothing else does anywhere else with any other of these stimulus amounts. So it would be really interesting to see how that works and to clarify whether that is the case.
Yeah, and I was sort of, I guess, wondering why they've only rolled that out in Queensland, but maybe because there's a lot of, self-employed people up here in Queensland, because I'm up here as well. But look, I don't know what the stats are on that, but I'm not sure if you've got any information on that, Adrian. I'm
No,
sort of
I don't.
thinking, yeah, okay. It'll be interesting to see how quickly, or how much longer that stays around, because I'm assuming every business is going to be jumping on that one.
Yeah, yeah. So I've moved on for you. I've moved to the next slide for you.
All right, perfect. So basically, a lot of these lenders out there, if you've got mortgages, investment loans, everything like that, generally speaking, is if you've been affected by, loss of income, lost your job, anything like that, possibly even tenants have just could not pay their rent. And I know there's going to be a bit of info coming out on that shortly, but a lot of your lenders are willing to work with you, and most of them these days have sort of stipulated that they're willing to give people 3 months to start with, but possibly up to 6 months of reduced or stopped payments. I've had a few clients contact their banks so far over the last couple of weeks, and most of them have basically said, look, they're going to capitalise my interest payments for the next 3 months and then we reassess, or they're going to change our P&I payment just back to an interest-only payment because we can afford to make that one. So look, they're pretty, they're willing to work with people. I guess you've just got to plead your case. So I guess a few other people have asked me, will my credit rating be affected? As far as I'm aware and what I've investigated, no, it won't be, because the bank has actually agreed to this financial hardship. So generally what will happen at the end of the hardship is that your loan will then be extended out at least the 3 months or the 6 months, depending on the arrangement. So effectively, it's going to take you longer to pay that mortgage off, but I guess it's going to help you in the interim just to get through the next 3 or 6 months. So the only piece of advice I would say would be, you need to, when you're actually asking your lenders about this stuff and asking them for hardship or assistance, you need to basically be saying that you've suffered loss of income specifically from the virus. I mean, if you call the bank and just say, look, I just don't want to pay my payments because I want to keep money in the bank account, they're pretty much going to go, well, you haven't suffered a loss of income, so no, we're not going to approve that for you.
On that, Melissa, do you know if they ask for proof that you've lost your income suffered or not, or do you think they take people on their word?
No, from my experience and from obviously my clients that have done this in recent weeks, none of them have had to send through proof. They will go through a general I guess, asset and liability over the phone. So you sort of have to go through what your expenses are and that sort of stuff. So I'd recommend having that stuff in front of you. But realistically, they're not going to ask for your bank statements and sift through everything and ask for pay slips and stuff like that. They understand that people have lost their jobs and, all your hours have been cut. So they just don't have the time to go through every, a client's bank account, basically.
So it's not really that hard, is what you're saying.
No.
As long as you make sure that you're saying that the coronavirus and your income suffering is the absolute reason you're trying to defer your interest for 3 to 6 months, and that will go a long way to helping you get over the line. And if they ask for other things, I'm assuming, because if you've got rental properties and you've got
is this just principal place of residence?
what are they going to look at? What are they going to ask? What's that about? Is that just your living costs, or are they going to ask everything?
No, they'll want to know your whole picture. So most of the time they'll they won't stop your payments on your mortgage. They will just capitalize the interest. So either way, they're getting their interest back. It's just going to take longer for them to get that money, I suppose. So they're willing to work with people. But I guess if you've got an owner-occupied mortgage and 3 investment properties, and then all 3 tenants stop paying rent, and then you lose your job, you can't pay any of your mortgages. Yeah. So you're going to have to put all 4 of them on hold until you can sort that out. So look, it's case by case. Of course, there's no real a hard or whatever answer. You've just got to, I guess, plead your case with the lender, tell them how it is. They all know we're all doing it tough, so to speak. So they're willing to work with people. But my other advice was just don't leave it till you've actually defaulted either. If you know you're not going to make that payment or you're having troubles, I mean, get onto your bank and do it today rather than waiting. The banks are absolutely swamped. Their call centres are just completely inundated because a lot of them are actually overseas. So in the places like Philippines and stuff like that, everyone's on a 4-week lockdown over there. So no one's working basically. So for the likes of Westpac, they've had to close their call centre in India for that reason. So this is why they're asking people to actually go to their website and put in their request through. There's actually a dedicated hardship link on the bank's websites that you can go to start the whole process.
And on that note, I went and had a look at it too, and I actually went through the process just so I had an idea how it worked before tonight's call. The 2 different banks I went to, which was Westpac and Rams, which obviously Westpac and Rams are one and the same really, for the purposes of what we're talking about. It was all you could do was put in your name, your mobile, your email address, and hit submit. And they said, we will come back to you. And that's literally where it's at. So who knows how long it's going to take.
Absolutely. I've had clients that have done the same thing with NAB, and they've been waiting over a week for anyone to contact them. So again, I think just making that initial, and if you've got proof that you've made the initial contact with them, it could take a week or 3 weeks, 4 weeks. I'm really not even sure how long all this is going to take. I guess you've got to imagine how many people are actually doing this right now. And I don't think the banks have got the resources to deal with it. So there's going to be a big backlog. I can probably assure you of that.
And one of the ones we contacted was close on a week ago, and we still haven't heard. So I'm tipping there's going to be a fair backlog. Now, before we move on, I've got a few other questions here. The person from Queensland has said, and I quote, just so that everyone else can know this too, QRIDA views your end-of-year distribution as the wage which you earn from the business as a sole trader, and this should be input as owner's salary drawings on the application form. So there you go. That's good to know. Now, is there any flexibility in the banks ending a fixed term interest early due to COVID?
No, I've asked that question too. In saying that, there's a broker, what's it called, a Facebook page. It's called Finance and Coffee. The us brokers put stuff on every now and then when we need help with certain things. Anyway, there was another broker that actually said that one of his Bankwest clients had called Bankwest and finally got through to them, and they waived a $14,000 break fee just to switch him onto a lower product. So that's Bankwest, but as far as I'm aware, ANZ issued an email today and they are definitely not doing that. So again, I'm not exactly sure. I don't know if that was a definite thing with Bankwest, but that's what this other broker had said, and I was quite surprised with it because normally that doesn't happen at all. If it's fixed, you still have to break the fixed rate, and you'll be charged to do so, unfortunately.
Okay, that's that. Someone else put, my state bank asked for nothing. It was a simple 2-minute phone call and they got 6 months. And someone else written, I contacted Westpac a week ago and I'm still waiting. Now,
actually, my state bank are really good. I called them today and got straight through to their call centre. So they're a little bank based in Tasmania. Maybe that's why, I'm not sure.
But all the big boys, they don't give you that option. You're going to have to go online and wait for them to call you back at some point.
Yeah.
Next question is, if you have a service entity set up, this is obviously for dentists, then it would not be considered an owner's drawing. That's something we would I'd probably rather talk to you outside of here about that, because it's getting a bit drilled in too much for things. So that's okay. Now, that's that. So, Melissa, let's move on. No, it doesn't matter.
They just suggest that you ring at 7 a.m.
Yeah, someone suggested thanks early and you might get.
I just saw that. Good idea.
Right, now, Melissa, you're going to be covering traditional finance options because we've covered stimulus options. Now you're going to be talking about traditional options.
Yeah, look, basically not much has changed in this space yet. I said earlier that a few lenders are actually not lending to certain industries like hospitality, retail, for obvious reasons. We even had a few lenders that have pulled any casual employment. So I guess my other advice to give people is it's such a great time to be looking at what loans you've got and can you consolidate any of them. So we're doing a lot of refinances at the moment where we're just consolidating clients' debts into one home loan, or even personal loan if there's not enough equity in a home loan. But if you're paying over 2.5% on a mortgage, like your home mortgage, you're paying way too much. So there's banks that are offering much lower fixed rates. Like we've got a lender that's doing a 1-year fixed rate at 2.09, which is fantastic. And that's P&I, don't forget. It is fixed, and I'm not sort of sure if it's a great time to be fixing right now, but at that rate, I mean, if you can save 1.5% on your mortgage and lock it in for a year and just set and forget it, I mean, that's a great option, I think, for most people. The investment rates are quite low still. They're looking at about 307 for a variable interest only. You can fix it a little bit lower if you're keen to fix. Just bear in mind that if you are fixed on your current mortgages as well, and there is a break cost payable to change banks, or even to get onto a better product with your bank, there's a few lenders that are offering refinance cashbacks. So for taking new business over to them, they'll give you upwards of $6,000 as a cash into your bank account after settlement if you were to refinance an investment property and an owner-occupier. So if you wanted to do like a straight just owner-occupier consolidation, some of the banks would give you $3,000 just for, taking your business to them. So if you're on a fixed rate, that could actually cover majority of your break costs, and it could be worthwhile for you to do that.
Can I ask Melissa about cash out? So for instance, if you do any of these, whether it be an owner-occupier or an investor, and you've got some equity and you want to take out a line of credit or whatever product, I'm not going to focus on the product. What are the cash out rules these days if people are using this to help with their business cash flow?
Yeah, that's a good question. I was actually I've got a bit of info on that. You read my mind. So with cash out, you can still refinance for cash out purposes. So you can generally take up to say 100 grand with most banks without, them asking too many questions. So a few lenders though won't do cash out for business purposes. So you've got to be sort of careful on how you approach it and which lenders you go with. I've got still a few low doc lenders, or alternate doc lenders they call them now. So basically, if your financials aren't up to date, you can supply 2 BAS statements or an accountant income declaration, and you can do cash out with some lenders up to an 80% lend and upwards of 500,000.
Cash out 500?
Yes.
Oof.
Yep. Not many banks
talking no for those sort of products.
That rate in particular is 4.89 variable.
Yeah.
So again, it's probably cheaper than the Westpac business loan that we were talking about before. And it's actually on a 25-year or 30-year loan term, not a 3-year loan term like a normal business loan. So
what about fees and charges to set it up?
It's pretty standard, anywhere between $1,000 to $1,500, depending on.
No, that's not too bad.
There's a few lenders that charge like risk fees or mortgage insurance for low doc loans above 70% though. So just bear that in mind. If you, I guess, depending on your equity position, you might not need to go up to an 80 and you could probably get a cheaper rate.
Will they capitalise those risk fees?
Not above an 80, you can only do it generally above, like if you did a 70%, you can cap it on top. So you can't go above an 80% lend regardless with low doc.
So if you got a 78% lend, you could probably include the risk fee and stuff like that and still keep it at 80.
Yep, absolutely.
A question here, which banks are offering the cashback for the transferring of loans?
Oh, there's heaps of them. Pretty much all the majors are still doing it, but in saying that, all their turnaround times are actually quite bad at the moment. NAB have introduced a new one. I think they've updated theirs today. I got an email about it. That's the 6,000, I believe. So that's for 2 properties to refinance. So pretty much the major banks are doing that. CBA, Bank West, I think, are still doing theirs potentially. Suncorp. Yeah, they all chop and change, to be honest, but I guess it also comes down to turnaround times too.
Yes. And on that, actually, that's a good point. If I'm sitting on this webinar going, all right, I think my most practical financing option here is I've got equity. I think my most practical option and speed and fees and interest and weighing it all up in theory, remember we're talking hypothetical at the moment, is to do one of these refis. What sort of time period from the time I contact you to when I should be able to get the cash?
Well, if we use a bank that doesn't have a 30-day turnaround time, generally speaking, refinance would take anywhere between sort of 4 to 5 weeks in the current market.
Yep.
We've got, with some lenders that we deal with, because we do quite a bit of business with them, we do have platinum status, so they generally will pick up our applications the same day we submit them. So, and we can always do upfront valuations with most of lenders too, so that saves time.
But is that a full doc or what did you call it? I'm so used to saying low doc.
I know, right? It's now, well, alternate doc, they call it. So alt doc, yeah. So you've got to be careful on how you talk about it.
What's the turnaround time under both scenarios, Melissa? Full doc versus alternate doc?
Well, there's not much difference in it, to be honest. Maybe upwards of a week it's actually probably a lot easier to get an alt doc through than a normal loan, because you don't need to supply all the other stuff you would do for a full doc loan. So
what sort of stuff do they want for alternate docs?
You still need to get 6 months BAS statements at least. Possibly, depending on how much you want to borrow, you might need to accompany that with an accountant income declaration, which is specific for that particular lender.
Yep.
You need 6 months home loan statements, rates notice, signed application form, of course, and ID. That's pretty much all they ask for with low doc loans. It's pretty straightforward.
Just on that, in this current climate, I know you touched on it earlier, and you and I have spoken off this chat about this. There's going to be some, with these types of non-stimulus lending, so in other words, traditional finance lending, there's going to be some occupations that will not get this, because if they're going to go, well, you're risky because you're now not open at all, you've got no income. Do they have a list of potentially jobs / businesses types that they're going to not even look at?
Yeah, absolutely. We're already seeing a few lenders that have they're not lending to certain industries, and they've emailed us pretty much, straight now, this is not happening, we can't lend to these industries. So I guess if you own a cafe, that's an issue. If majority of your income comes from retail, that could be an issue.
What about dentists? I'll give you a good example, because there's a lot of dentists that'll be on this. What about dentists?
I haven't seen anything with dentists. Dentists are still classified as a professional industry. So
what about real estate agents and those types of things that have been impacted as well?
I haven't seen anything come through for real estate agents, because most agents are still operating.
What sort of industries? You've said cafes and retail. Obviously, retail shops would be another, and cafes and restaurants would be another. Is there anything else that definitely is off the books?
Yes, anything. Yep, pretty much tourism.
Gyms. I would imagine
hospitality. No, gyms are not, surprisingly, because a lot of personal trainers, they're still able to operate. But yes, anyone who owns a gym, you can still do your one-on-one PTs with them. So even though, and a lot of these gyms are actually doing virtual, virtual workouts. So I think a lot of industries are trying to figure out how they can keep their business going, but it's the main one who've got shop fronts that have had to close.
So your food and your retail and your restaurants really are the main two that have really been hammered.
And you know what? This could all change. I mean, I'm getting my inbox went from 100 on Monday, and it's now up to 330 today. So we get that many emails just with updates and what's going on. I have not had the chance to read them all. But realistically, it's just something that we're just going to have to deal with, I suppose, in the coming months.
Cool.
Yeah, so look, that's pretty much it. I mean, I'm more than happy to chat to anyone about their personal situation and how we can help. That's my team. We've got Georgia and Shay. We do work from home anyway, so our business is all remote. And I've also got a VA who does all our admin stuff now, so that's good. But look, we're here to help. If anyone's got questions or needs to run anything by us, certainly you can get in contact through the website or Facebook or wherever.
One final question, Melissa. Someone's asked, what about construction industry? Can they still get finance?
Again, nothing has come out saying we can't do, I guess. Do you mean like tradies or?
No, I think it might be wanting to build. So, well, but let's consider either. Let's consider tradie types, and let's consider people who actually build things for a living.
Yeah, look, nothing's come out saying they're not going to lend to certain trades because the construction industry is still going ahead. There's people are still going to work. The only thing I will say is that construction, if you're buying land and building, we might see potentially low valuations come in depending on. So that's one thing that sort of happened after the GFC. We obviously had issues with low valuations. And I sort of feel like that could be something that might happen now. But again, who knows? I'm really not sure. At this stage, you can still get land, still funds to build property.
So in that scenario, if they were thinking about it, you'd sort of say act sooner rather than later?
Absolutely. I was going to say, if you can sort your finance out now, don't wait. Get onto it. I really don't know what lending is going to be like. It's probably going to get harder. So I feel like we're going to be inundated with inquiries over the next few months. So yeah, jump on it now if you can, if you've got the time to do it, for sure.
Quick one on that too. Let's say I put in an application and then they suddenly pull the rug on an industry. How does it work? If it's unconditional that they'll say, no, we've got to go ahead with this. And if you haven't got there, they'd pull the rug on you. How does it tend to
I've actually, we've got a webinar with our aggregator about this tomorrow, because there has been, not with us, but with other brokers that we're in touch with, they've had approvals been pulled on them after unconditional has been offered. So I don't know where that's going to stand, especially if you're buying a property and you've paid a deposit on it. But in saying that, if that lender pulls an approval on you, we could certainly look at, trying to get it done with another lender who's happy to do it.
Yeah.
So look, it's such an unknown, and it's something I'm mindful of, because again, the lenders can just pull lending on anyone at any given time, which is a scary thought.
Yeah.
So yeah, if your circumstances change or you lose your job and you're halfway through an application, that lender's pretty much going to decline the application. So,
but if you got to unconditional, they wouldn't be able to do that, would they?
Yeah, well, my advice would be just to settle it ASAP if you can, like after it's approved. But in saying that, Adrian, I've heard of other brokers, it's actually happened in recent weeks with other brokers. So,
wow.
It's a scary thought, but it's, again, I guess it depends on the circumstance too and whatnot.
Okay.
So,
Can I ask a question, Melissa? Your Facebook page, are you updating that regularly with all the stuff that you're finding out?
Yes, yeah, I'm on there quite regularly in between waiting on hold with lenders and whatnot. I'm like posting stuff. So yeah, we're pretty active on there. We've got heaps of followers too. So I try and get something on there at least every few days.
Yeah, so that's a good place to go to see where things are changing.
And no doubt, Melissa, I'm sure that you and I will have another one of these in the near future, in the next probably 2 or 3 weeks, given the dynamic changes that are going on here. And I think it might be viable for everyone in this ever-changing climate to have a quick update on that at some point in the near future, and we'll keep everyone informed. That doesn't look like there's any more questions. So, Melissa, thank you so much for giving up your family time. I appreciate that, coming on and giving people some wonderful knowledge, and to give them some stimulus options, finance options available, and also some traditional finance options available. But I know that Melissa and her team, just give them a buzz, shoot them an email, and they'll if there's any way of getting it done, they'll get it done.
Yeah.
So
yeah, I don't like taking no for an answer, that's for sure.
But you're like us in the lending world. You try
Yeah.
and do everything you can to get the job done and manipulate what you can to get the job done within the rules. Unless it's like
absolutely.
us, and that's why we get on so well.
Exactly right.
So thank you for your time.
Thank you.
Thanks,
guys.
Melissa's a very important part of our team, and that she's here to support you guys as much as we are. So, lean on her if you need her. She's there for you guys.
So thanks heaps. I'm going to stop your presentation now, and I'm going to start my one. So just bear with me, guys, while I get this sorted. So hang on, I've got to do this. I've just got to do
But you need to take up one of those Zoom Master courses that are out there now.
That should be right now.
Yeah.
Okay. All right. Thanks for your patience, guys. I'm just going to get the questions. Sorry, I'm just going to get the questions back up again so I can see them as we are rolling. Where's the chat? Hang on a second. Let me just get the chat here as well. Thank you for the feedback. Someone said I'm getting slightly quicker with Zoom, and I appreciate that because I've certainly got my old plates on, and I'm doing the best I can. But anyway, so now on to my presentation. I had a feeling every presentation we've done so far in the last week and a half, we've been hammered with questions, which is wonderful because part of this is about providing as much knowledge to everyone who's on here as possible to make some practical decisions. And that means the more the questions, the more people get to know stuff that a lot of things you're thinking, other people are thinking. So, oops. Okay. The first thing I'm going to cover, we've been hammered about in the last couple of days because our last session was Monday night and it came out during the day Monday, but I honestly, and I said that on Monday night, I hadn't had a chance to even look at it, let alone do it justice to get my head around it a little bit. So we made a point of saying we'll definitely be covering it tonight. So after Melissa's, we're now getting into this. So JobKeeper payment. There's a lot here, guys, and a couple of points. I've deliberately made these slides content heavy for two reasons. One, I'm going to go through it all and you guys get to rewatch this at a later stage. So I want to put as much on here as possible so you can reread this yourselves, pause the video when you get the link, pause it at whatever suits you and reread all the overheads and listen to what's being said. And you can take your time and go back and listen to it again. So I've tried to put more than I can in here to make it viable for you guys later on, more so than now, okay? Now, the information on JobKeeper it came out Monday and it's based on the government's media release. Now, the really important thing is point 2. Unfortunately, as we sit here right now, it's not legislation and hasn't passed through Parliament. So as such, it is not law yet. So what that means is we can't go off half-cocked and make decisions on this because it's actually, we don't know if we think like all the other stuff they did, they pushed through pretty quickly. But right now, as of right now, it's not law. So we'll keep an eye on things and we'll obviously update you guys when we know it's law, which will hopefully be in the next day or two, given how quick they push the other stuff through, the stimulus information. But right now, it's not law. Now, in a nutshell, the JobKeeper payment is a subsidy paid through the tax system that you actually have to apply for through the tax office. And it's paid to eligible employers, including self-employed people who have been impacted by this virus. And it also includes self-employed people who don't employ employees, can also potentially get access to the job seeker payment. Now, to receive it, you must register an intention to apply on the ATO website, and they will then assess in due course whether you've experienced the relevant income decline that's required. And I'm going to come to that in a minute. Now, you're going to have to also provide information to the tax office on who are eligible employees, which we're going to cover in a minute. This will include information on who is eligible as of the 1st of March 2020 and those who are currently employed by your business, including those that may have been stood down and then rehired at a later date. For most of you guys, single touch payroll data will be used to pre-populate employees for your business. I was speaking to someone today who's had a wonderful experience with single touch payroll. They haven't been able to talk to them. They haven't been able to, the ATO hasn't been able to sync their single touch payroll data. So they're still trying to sort that through, which is a bit of a worry, but anyway. And it ensures that each eligible employee will receive at least $1,500 a fortnight before tax. And you are going to be required to provide information to the tax office on a monthly basis. Now, what I thought I'd do is I quickly cut this in before tonight's call. I actually went on, and I'm going to show you how right now, literally at 5:15 this evening, this is the process, and I've done this myself. You go on to ato.gov.au.
You recommend that everyone...
I would suggest that every one of you do this, because it doesn't mean you're locked into the system. It just means the ATO know you're interested in JobKeeper, and they'll keep you informed of any updates. And until you actually get approved and assessed, you're not locked into anything with this. But what it does mean is that at least you've flagged your interest with the ATO that you're interested in this. And I would suggest that everyone on this call who's got a business does this, because there's no harm, no cost, etc. And that way you'll keep updated as things develop, and then you'll go through the assessment process in due course with them. And that'll be automated more because you've already flagged your intent, right? So I wanted to show you, go on ato.gov.au, down the bottom right-hand corner, there's a JobKeeper payments section. And you click on that, and this takes you to the second screen. And then down the bottom, you just click register now for JobKeeper updates. In that, that's all you have to fill in. Business name, ABN, contact name, email address, and mobile number. Hit submit. And you get this. You are registered. You've registered for updates on JobKeeper, this program, etc., etc. You do not need to phone us. We will contact you as more information becomes available. You only need to register once. So I did that the other day, and I got a text because it came out on the 30th with information, and it changed already on the 31st. And I got a text saying there's been an update. Go to the website and find out what the update is. So that's really good. So I'm encouraging you all to go ahead and do that. Now, when can the JobKeeper payment be claimed in respect of an employee? In practical terms, what it really means is if you're an eligible employer and you'll receive the JobKeeper payment for every eligible employee who is on your books on the 1st of March 2020 and continues to be engaged by you as an employer. And I'm going to cover more details in a minute, including full-time, part-time, long-term casuals, and stood-down employees. Employees who have multiple employers will need to notify their primary employer to claim the JobKeeper payment on their behalf, as only one employer is eligible to receive this payment. Now, in most cases, claiming the tax-free threshold will be sufficient notification that employer is your primary employer. Background on the JobKeeper payment. Under the JobKeeper payment, businesses impacted by the coronavirus will be able to access a subsidy from the government. Now, basically, it's $1,500 a fortnight for eligible employees from the 30th of March, even though you've got to be employing from the 1st of March. They look at it, what you've paid in March and forwards for 6 months. Eligible employers will be eligible if their business has a turnover of less than 1 billion, and which is, just a little bit, 1 billion, and turnover has fallen by more than 30% for at least a month. I'm not going to go through the next two because they're for big companies only. And as I stated already in a prior slide, the employer must have been in an employment relationship with eligible employees as at 1st of March and confirm that each eligible employee is currently still engaged and eligible to receive JobKeeper payments. Not-for-profits and self-employed individuals, which is businesses without employees, that meet the turnover test, in other words, the 30% drop at least test, are eligible for some level of JobKeeper payment. Eligible employees are employees who are currently employed by you, being an eligible employer. They were employed at the 1st of March. They're full-time, part-time, or long-term casual, and they deem a long-term casual to be a casual who's been employed on a regular basis for longer than 12 months, as at the 1st of March 20. They're at least 16, and they're an Australian citizen and not getting JobKeeper from somewhere else. Understand too, if your employees receive JobKeeper payments, that their eligibility for other things, because it's deemed income, if they're getting other things as well, that might impact those things, because Services Australia will be told about this income that you're getting. Now, this came out as an adjustment or an annexure to the 30th of March about the 30% fall. I'm not going to focus on the 50% fall because that's for businesses with $1 billion or more. I'm pretty confident we don't have any of those size businesses involved. We don't have anyone of that sort of level. But to establish the 30% fall in income, most businesses would be expected to establish their income has fallen in the relevant month you're in or 3 months prior, depending on the natural activity statement reporting period, relative to turnover a year earlier. Where you weren't in business a year earlier, or where the turnover is not representative or an average turnover, the tax office have basically the discretion to consider additional information to take that into account for businesses that have been affected by the coronavirus. And also to that, that includes discretions to set out where you've actually shut your doors too, and or significantly change your operations. They'll take things into account, and there's going to be some level of tolerance in this ever-changing environment in good faith, that where you estimate it's more than 30%, but your turnover is slightly under that, right? They might cut you a bit of slack, but you certainly don't want to be pushing too many boundaries with this. I don't knowing what the HR are normally like. They're normally bulldogs, but I think given this climate, they might cut people a little bit of slack, but without pushing the boundaries too much.
Can I ask a question there, Adrian?
Yep.
Look, so it says here the income has fallen in the relevant month. So are we talking this month, next month?
Well, I would argue that initially, because it's from the 1st of March, I would argue they're probably talking about March, and then you'll go back to, I imagine they won't be talking about the March quarter if you've been in normal employment and normal income for January and February. If things really started to take a turn in March, I imagine, and it's hard to know what this is going to actually be until we start dealing with actual situations and finding out what the tax office are actually applying and how they're practically looking at all this, because we don't know that until we get down the track a little bit. Theoretically, I can imagine if you've had a big downturn in business in 1 month, that's what the month they'll look at to start with relative to a year ago, and the next month relative to a year ago, et cetera, et cetera. Now, they're talking about activity statement periods. Technically speaking, some people lodge their BASs monthly, some people lodge their BASs quarterly. I think they're going to initially look at quarterly in line with the most business activity statement cycles. But remember the bottom 2 bits down lower in this slide, if you can show that there's a drastic fall off in a specific month and that's going to continue, I would imagine there's some scope here to have that assessed, and they're going to allow you to look at it month by month relative to a year ago.
Because I was going to say a lot of businesses haven't really felt the impact totally this month.
Well, March they might have started to see, but then a big kick on in April.
April is going to be more when we're going to see this.
And this is what I'm saying. We don't know until we start going down this path how they're going to apply this, whether they're going to look at March and go, oh, yeah, it's dropped off. And you can show them what's happening in April. You can show them your bookings. You can show them everything else to back up that it's been hammered. I imagine it'll be a combination of all of that. The application process. If you've got employees, as we've already covered, you've got to register your interest, which I just showed you how to do that before. What's going to happen is if you don't do it before they allow that on the website, there's going to be some other online version of applying for this. But the first payments will not be received until the start of May. Now, for all of those who have been on prior calls, that start of May is pretty in line with a lot of other payments that you're getting. Early to mid-May will be about the earliest you get anything of any of these sorts of stimulus payments from the government. Okay, so just you have to factor that in mind. You're probably going to have to potentially still try and get through April and probably half of May before the stage 1 or stage 2 stimulus payments or anything else comes through of these types of things as well. Now, eligible employers will need to identify eligible employees, which we've already covered, and provide monthly updates on that. And when they're eligible, you'll be getting $1,500 a fortnight before tax. And it's up to the employer, and I'm going to cover an example on this, okay? It's up to the employer if they want to pay super on any additional amounts, but I'm going to go through that in a minute.
Do you want to ask the question?
No, not yet. Okay. I'm going to hold off on questions, guys, until we get right through this Jobkeeper process.
All right.
And then I'm going to cover Jobkeeper then I might take a lot of questions, but I just want to keep going while I'm on a roll and just go through the whole Jobkeeper thing, and then I'll come back to questions, okay? Businesses without employees, as I touched on earlier, you still got to register your interest like before. Businesses without employees will need to provide an ABN for their business, nominate a specific individual to receive the payment, and provide that person's tax file number and a declaration as to supporting the drop-off in activity, because you've got to meet the same drop-off in activity rules. And likewise with people who have got employees, businesses who've got employees, people who are self-employed will need to also provide a monthly update to continue the, so in other words, you're still going to meet the 30%, all that sort of stuff. Now, how is the JobKeeper payment applied by a business? I've given 4 different scenarios here. If your employee ordinarily receives at least $1,500, remember from here, the minimum payment is $1,500. Sorry, the payment is $1,500 per fortnight before tax, right? If the employee already is receiving $1,500 in gross salary income per fortnight, they will continue to receive their regular income as they are now. But in this case, the JobKeeper payment will subsidise their income, so you're not actually having to foot the bill. If the employee is receiving less than $1,500 in gross salary income per fortnight, the employer must pay to the employee the difference, so another the rest. So they're going to top them up to at least the $1,500, which means that way you're still subsidised for that. If an employee's been stood down, then the employer will put them back on the books and pay them the $1,500 a fortnight. And if the employer was employed on the 1st of March and has ceased employment and then been re-engaged, same deal, the employee will receive the $1,500 per salary under the JobKeeper scheme. Now, I've got an example here, and I'm sorry it's a lot squeezed in. I've taken that from somewhere totally different. Example, he owns a business and the business has declined by more than 30%, and they had the following 3 employees at the 1st of March. A permanent employee who was earning $3,000 a fortnight, a permanent part-time employee who was earning $1,000 a fortnight, and a recently stood down employee who's now been stood down without pay. Adam is eligible to receive the JobKeeper payment for each employee for a maximum of 6 months, and it's paid monthly in arrears. The JobKeeper payment as follows. So for instance, for Anne, you're paying her $3,000, and as well as super guarantee on the $3,000, right? How that works is, in that case, the $1,500, you effectively get to pay half the wage, okay? In the second scenario, where Nick was getting $1,000 permanent part-time, and an additional $500 because of the JobKeeper payment, then Nick will now be paid $1,500 a fortnight. But in this case, the $1,500 fully subsidised the whole wage. But in relation to Nick, they've got to continue to pay the 9.5% super on the $1,000 they were already paying, but they have the option of choosing to pay the super guarantee on the additional $500. They're not required to. And last but not least, the person that was stood down, Fred, basically now they're going to be paid the $1,500 a fortnight. And because it's the whole lot, they're not paying them anything previously. The business has the option of choosing whether they want to pay 9.5% super on the $1,500 or not. And next example, self-employed with no employees. So you're a sole trader, there's no employees. You've proven that you've dropped to 30% in a typical month 1 year ago. On this basis, Melissa, coincidence, it wasn't because I came up with this, it was another example from somewhere else. Melissa's able to get and will receive the $1,500 per fortnight before tax, which is paid monthly in arrears. Okay, now, questions?
Can I ask a question there?
Yep.
Are they expected, so you've got these casual workers or part-time workers that are entitled to it, and they're only getting $1,000 a fortnight, and now they're getting paid $15,000. Are they expected to do any extra work for that?
I don't know the answer to that. I would imagine under the way they're trying to do this.
No.
Lucky bonus for these people. From what I know, I don't think the employer, I don't know, of course, this is a practical thing, but I can't imagine they've done this to try and go, well, beauty, I'm going to give them 50% more work and flog them to get another 50% worth of productivity out of them because they're getting an extra, in that example here. Whoops, hang on. In this example here with Nick, I can't imagine they've done that with the intent of saying, well, Nick, I expect you to work 50% more hours now.
With the same sort of thing with Fred.
And same with Fred. Well, I don't know. I don't know the practical application of under HR rules of what the requirements are, because this is purely a cash flow incentive to get people. What they're trying to do is keep people on the books, right? So I don't know the HR side of this.
So tomorrow night, potentially, we can ask, what do they, Employ Sure, who are coming on board.
We're going to cover that later, but yeah, we're having a HR session tomorrow, but I don't know the answer to that, Nita. That's
Maybe they'll know that answer.
That's a very good question, but I can't imagine that's the intent of this legislation. Okay. Now, hang on. Oh, sorry, I mucked up my slides. Just bear with me. And then I'll go through the questions. Just want to get to where I was. There we go. Okay, questions. All right. Okay, let me just go down a little bit. Actually, let me open that. It's too big. Okay, questions. Sorry, there's quite a few. I'm just going through them. And
a dentist who are working as a sole trader only has an ABN, no company, eligible to the JobKeeper.
I think I've covered that now, because the slide that's up now says self-employed with no employees, you are eligible for one person to get the JobKeeper.
What about companies who have sole traders and wife gets a distribution at the end of the year?
As far as I understand these rules, they're done on gross wages paid through the books. Just like some of our other webinars we've had already are covering what you get out of PAYG tax and part of the stimulus package linked to that. I think that this is along the similar line. It's done on gross wages paid through the books, and therefore people getting distributions and stuff, it wouldn't be factored in.
I think I covered this one. Someone said March income, we operated for 3 weeks. That's what I sort of said, and have closed now fully.
So that might not be the full 30% downturn in March, but April will certainly be a massive difference. So people might not be eligible for the 30% reduction in March, but quite probable from April onwards, it may well be the case.
I want to ask a question there. So is it each month that this is being determined?
I don't know.
Or just one month? And then...
No, it's each month. I think you've got to be able to continue to show that you're 30% down on a year ago, 30% down on a year ago, 30% down on a year ago. I'm pretty sure that's the intent of this, and that you've still got eligible employees. Right.
There's too many coming through. If an essential service, we made a decision to close down temporarily and some staff doing work part-time, do we miss out?
I don't think so. I think because this legislation covers people stood down. So I think you're still eligible for these types of things. But once again, as this rolls out, we'll get a bit more clarity, because remember, all we're going from is a few pages of information on a website at the moment, and there's going to be some more clarity over time. But based on my understanding of the intent of this legislation, I think that if you've employed staff and stood them down, you're going to be eligible for this type of JobKeeper payment. That's what it's designed to get people back on the books and keep them employed. And look, on that note, for those people who came up to who were on our prior webinars where we spoke about the stage 1 and stage 2 stimulus payments that are based on employees withholding tax that they take from wages and you remit to the government, the ATO. Stage 2, which I'm not going to revisit it now, by the way, but stage 2 is purely flows from stage 1. But to get stage 2 payments or stimulus payments, you've got to be continuing to employ people. Well, I think the harsh reality of that is based, and this is why I think these rules might have been brought out. I don't know this, but this is logic that I'm using, is if I'm had to shut my doors because I've just got no work and I'm not employing anyone officially, technically speaking, that would mean under the stage 1, stage 2 stimuluses, that stage 2, you wouldn't be eligible for any stimulus because you're not employing people. I've got a feeling they might have overlooked that, or maybe they had this in mind, I don't know. But if you're eligible for the job keeping payments, you're now employing people again. That would mean you're still eligible for the stage 2 stimulus as well. So I've got a feeling it's all three combined are going to work together.
I also think they're trying to get the queues down at Centrelink.
Oh, no question. And as you've already seen, guys, the onus is on employers to handle all this, and the ATO. So it's taking away a lot of the other government services and obligations and all that sort of stuff, right? Now,
What happens
now that
with
we've
sole
covered
traders?
that.
Yeah.
Sole traders we've covered.
The employees are eligible,
we've
but
covered
what
sole
about
traders.
yeah. Okay.
No, don't worry about that. No. Someone said, okay, our
clinic opened in Jan 19. Our revenue now and a year ago is fairly similar, probably not greater than 30% drop in revenue compared to last year. However, our revenue has significantly decreased in the last month or so. We are still eager. So are we still eligible for Jobkeeper?
Well, I would argue potentially, look, because remember, I know that I covered this earlier, where you've just bought a business or just opened a business, they're going to be a bit more leeway, right? But I imagine one of the common questions would be, if you've bought an existing business that's been obviously there prior, I imagine they may ask questions, well, how was it compared to a year ago and all that sort of stuff. And if you don't have the answers to that, which might not be the case because it's not your business, they'll have to work on, if you suddenly then drop drastically from the last few months to now, I reckon that's going to be enough potentially for you to work with to get these rules.
Is this available in construction with all of the conjunction, with all the other incentives?
Yes.
Is that
yes, it is.
Subsidy?
Yes, it is. And that's why we've covered the webinars. We've had some logic behind the way we've covered the webinars, because webinar 1, 2, and now today are all about what cash options are there available between the government, the tax office, the banks, as in the stimulus from the banks, and then traditional bank lending, and now Jobkeeper, because all of those things are what you guys have available to potentially provide you additional cash flow to get you through this difficult period. Now, that's all obviously general, because the idea behind these webinars is to give you guys some general information so you can start assessing things in the back of your brain about how this impacts your businesses. Then the plan would be, for all the clients we're working with, would be to then have one-on-one discussions starting very soon. We've just got to wait a little bit longer because there was new rules come out Monday. They got clarified on Tuesday. There's still talk there's going to be more rules. So we've got to sit back a little bit on our hands at our end and see if anything more comes out over the next few days, maybe a week. And then if anything else comes up, we'll have another webinar. If not, then we've given you all the general knowledge. Then what we're going to be doing is getting in touch with each of you guys and having one-on-one chats about how the general rules are going to be practically applied for you and your personal situation of you and your family, which is crucial, because all this information I've given you is only general to give you some knowledge. And the important part is not everything's going to suit everyone, and you're not going to just run off half-cocked and go and do all these things, because every option has ramifications. Every options, some have stings in the tail that you need to factor in, all these types of things. That's where the one-on-one practical discussions are crucial before you take action.
Is Jobkeeper payment subject to income, asset, patent?
Not that I'm aware of.
Income test.
I don't believe income or assets tests are relevant at all, okay, from what I've been told already. And yes, it's a tax-free subsidy. Well, it's not. Well, actually, good point. I actually don't know whether Jobkeeper is tax-free or whether you just hang on. Let's see, just quickly.
Well, you look at. Do you want me to read the next one?
Yeah. I'm not sure about the tax-free, but even if it's not tax-free, it may not be, and I'll tell you why. Because you're able to pay the wages and claim the wages, I would imagine, I can't see quickly on what the information I've got here, the other stimulus packages we've mentioned are tax-free. This one, I would imagine, is not going to be tax-free because you're going to be claiming the wages, which offsets some of the subsidy, right? So I would imagine this will be an income, I imagine GST-free, but I imagine it's going to be an income to you that you can claim your wages against, right? Now, hang on.
Dentist on contract, payment through facility fee, tax file number, but no ABN. Where do I stand for Jobkeeper? So
I'm assuming, because I had this down here anyway, because I know you're a client of ours, if you're a contractor, which is effectively a sole trader, and your income drops 30%, I would imagine that would give you access on the slide that's on our screen, that you can nominate yourself, and if it's down 30%, you'd be entitled to get the $1,500 per fortnight, I would imagine, based on being a sole trader.
Okay, if you have an employee who earns over $15,000 per fortnight, $3,000 as per your example, are we required to pay the full $3,000 or only the first $15 and top up $15 is optional?
Okay, So using our example here, with Anne, because she's paid more than 1,500, you continue to pay the 3,000 and you effectively get an offset of 1,500, right? That's the way it is. With Nick, I think Nick's the example you're thinking about. If you're currently paying Nick 1,000 a fortnight and you get 1,500, it's not negotiable. You have to pay the extra 500 to him. That's not something you have an option on. It is a requirement of these rules that you pay him the extra 500 bucks. What you do have the option on is whether you pay super on the extra 500 bucks.
Okay. This question might be for Catherine. Really sucks being an owner drawer right now. Does anyone know if we can stop mortgage payments on our SMSF homes?
I think Melissa's gone too, so I don't know that.
Does Catherine know?
Yeah,
You'd have to contact the banks, because everybody's case will be, like Melissa would say, everyone's case will be individual to what equity you hold in your self-managed super fund property, what rental you receive, are your tenants still paying your rent, etc. But I would think if you're like the other mortgages, if you have got investments where it's a rental and your rental is not being paid, I think you've got quite an argument with the banks to argue that you need some sort of leeway for 3 to 6 months.
And I know this person pretty well, and I know they're a client, and yes, it sucks to be an owner drawer with these current rules. But the problem is no one saw this coming, let alone the ferocity that it's coming with. And as I've had a couple of conversations in the last few days, there was reasons why, because not everything's black and white with wages. Not everyone draws wages, because when you draw a wage, you've got to pay the tax up front and you've got to pay super on the wage, right? And not everyone wants to do that. And so some people don't do that. They take drawings and distributions and dividends because that gives them more flexibility during the year and they don't have to pay the tax up front. So I understand your opinion and comment. I totally get it. No one saw this coming. Unfortunately, it's funny. Nita just came to me this afternoon and said someone's putting stuff out there that people are getting disadvantaged here by these rules if you get a distribution from a trust or a partnership. And we totally agree. Right now where we sit, there's no way around that. So,
but they are out there trying to.
They're lobbying the government to try and change this. But we will keep you informed of anything like that changes. But right now, the way it is, I think we just have to work on it being purely on employees only. And a lot of these stimuluses are based for employees only.
Okay, maybe one for next time. But you mentioned monthly in arrears. If we work on a quarterly basis, is it likely we need to wait for a reimbursement?
No, not that I can tell. I think the way this is working is payments are made monthly in arrears. And I think you're going to be in here. It mentioned, I can't find it now, but it mentioned about communicating with the ATO monthly. I think that communicating with the ATO monthly is going to be to make sure you've still got your 30% dip and you've still got eligible employees who qualify. I would assume on that basis, going by the other stimulus payments for PAYG options, stage 1 and stage 2, they're monthly as well. So I will work on the assumption that it's probably going to be a monthly payment once it starts. Okay. So now that's the questions on that for now. I'm going to now go into the next bit. I wanted to cover this because last webinar I had, not the last one, but the one before, I really rushed this because we ran out of time because we underestimated how many questions we were going to get, right? So I wanted to go through, because I have had people ask, can you go through this apprentices and trainees rules again? And I said I would do that. So in relation to apprentices and trainees, the government's supporting you guys, small business owners, to retain your apprentices and trainees. They're basically applying a wage subsidy of 50% of the apprentices or trainees' wages that you pay during the 9 months from 1 January 2020 to 30 September 2020. Where you're not able to retain an apprentice, the subsidy will be available to a new employer, which does suck a little bit. So if someone else takes them on, they'll potentially get eligibility. Employers will be reimbursed a maximum of 21 grand per apprentice or trainee, which is effectively 7 grand a quarter over the 3 quarters because it's for 9 months. And support's going to be provided by the National Apprenticeship Employment Network. I'm not going to go into that. Eligibility. To be eligible, the subsidy is going to be available for small businesses employing less than 20 full-time employees who retain an apprentice or trainee.
Will that be equivalent? So have you had more?
I
than
imagine
5
it's going to
times?
be the full-time equivalents. I don't know. This is a lot of these things will evolve over time because it's all just a few pages of theory at the moment. But I would imagine it'll be full-time equivalent. Yes. So if you have two people working 20 hours each, that's like one full-time equivalent, I would imagine. But I can't guarantee that, of course. The apprentice or trainee must have been working with you from the 1st of March, which, as we've had before, the prior legislation, that's how they're looking at things. Employers of any size that re-engage an out-of-trade apprentice or trainee will be eligible, and the measure they're hoping will benefit up to 70,000 small businesses and employ up to 117,000 apprentices. Timing. You can register for the subsidy from early April, and claims must be lodged at the latest by 31 December. For further information, go to the following websites: the Department of Education, Skills and Employment, and the website's there, and the Australian Apprenticeships website, and the website's there. For further info on how to apply for the subsidy, including whatever else they need, contact the Australian Apprenticeship Support Network provider, AASN. They go through an example. I thought I'd quickly go through that. David's employs 10 people, including 2 full-time Australian apprentices. Taylor, who's 20 and currently receives a weekly wage of $532.89, and Lisa, apprentice, who's currently receives a weekly wage of $772.71. David's is eligible to pay 50% of the apprentice's wage that have been paid since 1 January. So working out those numbers, because one of them was employed from the 6th of Feb to the 30th of September, and the other one from the 1st of Jan to the 30th of September. That equates to a 9,059 subsidy and a 15,068 subsidy. So, hang on. What's this? We done all that? Oh, sorry. So that's the kind of subsidies you would potentially get for the apprentices. Now, I'm not going to go through all that because not many people really wanted to know, but I wanted to cover it quickly so that it was on we had overheads on it, and I quickly discussed it, and they can go through it in detail. Now, Catherine, at this point, I'd like to introduce...
I don't know, there's a lot more questions here.
Yeah, there's more, I know. I've got more questions about Jobkeeper, but I might leave them to the end and keep going through the slides. And I'll then take any additional, because there's more questions been coming in about Jobkeeper, which I'll come back to later. So if you want other questions, please send them in, but I won't come back to them now till the end. At this point, I want to introduce Catherine to you guys. She's our super guru who works with us, and she's the go-to girl, everything super with us. Now, the next few slides are specifically about what other cash measures you can potentially get out of your superannuation and what ramifications and eligibility criteria there are. It's part of the government stimulus package. There's a superannuation element you can potentially get out of super. I'm by no means saying, yes, go ahead and do this, but it's just, again, information to consider. And then when we have our one-on-one chats, we will discuss that at length. But if any of you guys who work with us, as you know, anything super related, Catherine's the gal who you go to for that. That's her forte and passion, as well as other tax and business, etc. But I'll let her go through these slides with you guys, and she'll take any questions you have on that. Go for it, Catherine.
Thank you, Adrian. And as Adrian said, of course, given it's your super, very much we would need to discuss this with you on an individual basis and make sure it's going to be the best thing for you. So part of the stimulus package that the government's doing at the moment includes you being able to access $10,000 of super for this financial year, and then another $10,000 out of your super in the following financial year. Also, very mindful to note is that you will not be paying any tax on these amounts, and it won't affect your Centrelink or your Veteran Affairs payments. So that can be a deterring point for some people. So don't let that worry you. Basically, you will be able to apply for this from mid-April, and you go to the MyGov MyGov website, log into your MyGov account, and basically go from there. The major thing about the eligibility, you need to be unemployed or receiving a job seeker payment, so you would again be unemployed as such. or after the start of January, which I guess is their date when they're really having the coronavirus affecting everybody. If you are made redundant, your working hours are reduced by 20%, or if you are a sole trader, also that your turnover has reduced by 20%. So your sole traders are being treated exactly the same as individuals for that manner. If you'd like to go to the next slide, please.
Oh, sorry, Catherine, sorry. Just
You're
flat
right.
me up a little bit, sorry.
Yep, sorry. So as I said, you basically go onto your MyGov, you go onto the MyGov site, you will automatically have to log in, and then you will actually go through the criteria. When you'll process that application, the ATO are basically going to do everything else for you from there. They're going to determine whether you're eligible to it. They'll send everything off to your super fund. Your super fund will then get, I presume, the normal 30 days to get your payment to you. That's a maximum of 30 days that any super fund has to roll anything out. So I haven't seen anything to say that's been smaller, but all things being equal, you should receive it in maximum 30 days if that's what you do. And super funds are being treated differently, as they always are. So one thing with the self-managed super funds, and again, if you're one of our clients, we'll definitely look at this for you, is that I have noted is you need to make sure your self-managed super fund provides for it. No self-managed super fund is going to provide for it because it was brought up 3 days ago. So what I've had a look in is, if generally speaking, in your payment of your benefits, there's also a clause that states that it also takes into consideration any other superannuation laws, which also then should take into effect Income Tax Act, thus then take into effect the coronavirus. But please, this very big disclaimer, we have nothing in writing on that at this stage. So yeah, the first time you'll be able to release your funds will be mid-April for this financial year, 1920. And then for the 2021, you need to do that actually from the 1st of July, being the next financial year. Sorry, I just wanted to let you know something else on that. One thing that they have noted about it, they've got a 6-month period, 6 months from the date of which they release the funds to the date that they can next release the funds. So all things being equal, if they release your funds and you apply in April for your 1920, you won't be able to apply till October, November for your 2021 payment. So just bear that in mind as well. That basically looks after the temporary release of super that they're providing for the 10,000. The other thing that they're doing to also help out our pensioners and people drawing down who have commenced their pensions is decreasing your rate by 50%. So you don't need to, most people would be taking out the 4, 5 or 6%. So you will be able to take that down to 2, 2.5 and 3. Please be aware, if you started a pension during this year, that 4 and 2 will need to be prorated. So you may end up only needing to also do less than 2%. Now, the other thing too that, of course, this has been provided for is with people having a lot of funds in shares that are in pension mode. And of course, the share markets had an absolute hit like nothing on earth. But it is starting to come back up, which is a good thing. The other thing that the government are going to also do is reduce the deeming rate, which will also help out our pensioners. And they're going to do that by reducing that by further 0.25 in addition to the 0.5, giving a total of 75 basis points or 0.75 percentage points. So on that basis, on the 1st of May 2020, the upper deeming rate will reduce from 3% to 2.25, and your lower deeming rate will go from 1 to 0.25%. That's basically everything that has come out for super at this stage. So that's basically all that I have to talk about.
I have a question, Catherine, directly to you. as a company director who's also an employee, can I make a $20,000 employer contribution in June and on 30 June withdraw the 10 grand?
I would really have to look into that. I can't see why not, because there's nothing mentioning about your actual contributions. It's actually the balance of your funds.
And I would say it depends on whether it's an industry fund or self-managed super fund, because what they have said is these rules are designed for industry super funds, and it's yet to know the process for self-managed super funds, how you're going to be able to get your money out and what the process and procedures are. But I would have thought theoretically, especially if you already had a balance in there, I would have thought that would be quite reasonable to potentially think that you could do that. But as Catherine said, if you do that, that would mean you couldn't take the next 10 grand for 6 months. That's the other thing you do need to realise.
No, I haven't read anything on it saying that it's contribution related. To me, it all reads very much as balance related, because it states about if you take out the second balance, what it does to your reducing balance and things like that, that it could effectively close down your fund, depending on what your balances are. So I don't think the contributions are taken into consideration. So I think very much, yes, you can put in your 25 grand and then take out your 10.
Now, there's another question for non-retirees. What rate will the super drawdown be taxed at? I'm not sure what you mean, but this 10 grand is tax-free. So this 10 grand coming out to you, but I think that's where you're going with this.
Yeah, so individuals will not pay any tax on these amounts released, and it won't affect any Centrelink or anything of that nature. So including, of course, family tax benefit when we say Centrelink.
Okay.
So that's all the questions.
I've got one.
Yeah, go for your life.
So, trying to pull out 10,000 out of my super fund.
Yep.
I'm probably coming from a self-managed super fund viewpoint. I don't know sort of how it would affect industry. But, if I've got a lot of my investment tied up in shares, that's really going to hurt, isn't it?
Correct. Yeah. Yeah. So you've got things like, at the moment, CBA shares before this happened was sitting just shy of $90. I think yesterday they were back at 61. So there you've got $30 in one share alone. So you could potentially, where 3 months ago to take out 10 grand would have cost you 10 grand of selling CBA shares, you would probably now sell 30 grand of those CBA shares to get that 10 grand. That's why I think very much we need to really look at this for our clients on an individual basis and make sure it is going to be the best decision for them.
Yeah, it's a matter of you've got cash sitting in those funds. That's fine. That's been unaffected. What about with your industry funds? They're going to have been hit as well too by all of these shares. It would be the same sort of impact for them?
In the industry funds?
Yeah.
Yes. Yep. Yeah. So if you go and have a look, if anybody that has industry funds, if you've looked at your balances in the last 3 months, they've come down a great deal. And the same thing, depending if you're in one of these, which most people are in a default fund and a balanced option. So it's made up of everything, but it is heavily drawn on shares, whether they're Australian shares or overseas shares. And unfortunately, the world market has been affected by this. So I don't think it's, I think whether you're in self-managed super fund or an industry fund, if you have a large share capacity in there, you are going to be taking out a lot more than $10,000.
That's not a real attractive option necessarily, but it is a means of getting money that you wouldn't be able to see until you're 60 or 70.
Of course. Yep. And the great thing, you're not going to pay tax on it. So you will get 10 grand in your hand. Whereas if you try to draw that down in any other rules, you'd get probably 7.5 grand in your hand.
So therefore, if you look at a 30% drop in your shares, then it's not that bad an option, is it? It's sort of a dollar for dollar.
Yes.
Well, look, I would argue it's like everything I've framed in this conversation. All of this is between webinars 1, 2 and 3. These are all the things you can do. And then we have the one-on-ones to work out what is actually appropriate.
Yep.
In theory, I would argue super is probably the least attractive option.
And I'd agree.
If that 20 grand pays some wages for a month, it keeps you going, it's a whole different ballgame, which is why we need to have a one-on-one chat to work out exactly what's appropriate for your situation.
Is there a time limit on doing this at all, Catherine?
Yes.
It's tax years.
It has to be done by 30 June.
You've got to do the first amount before 30 June 20 and the next amount before 30 June 21.
Okay.
Correct.
Okay.
So yes, there is a time limit.
You've got to make
You've got to have done, you've got to apply for this for the 1920, as Adrian said, before the 30th of June. And if you don't, it's gone. You can then only apply for the 2021 on the 1st of July.
Yeah.
Okay.
So there's no other questions on that. Catherine, thank you so much for your
Catherine.
time.
No worries.
Appreciate you giving up your time, your family
No problems.
time.
I hope everybody got something from that.
Thank you. I'm
Thanks
sure
a lot.
they did.
I did.
Now, I'm just going to do a few more slides before I go back into the Q&A and handle questions that we had to rush through before. I want to make, because I want to do this for a reason, I want to finish the presentation. That way, if people don't want to hang around for the additional questions, they can then go. But then anyone who wants to hang around, I will go through the majority of these questions, okay, as best I can, as quickly as I can, okay? So.
This is my baby.
Go for your life.
Okay, so we've started a Facebook group, guys, for our clients, you know, for our VIP Facebook for Superior Accounting Group. This is basically created so we can have an online community. Like Melissa will probably drop in and do a Facebook Live, potentially not another webinar. We'll try and get Melissa to drop some information in there as things change. But it's also designed for you guys, instead of asking us individual questions via an email, if you can put it in a generic format, put it out there onto our Facebook, we'll get in there, we'll answer your questions for you. And then someone else can go there and look and not have to ask the same question. We also want it to be, if you've had some wins, if you've experienced something, if you've gone to get a loan or you've gone to suspend an account because you don't need it anymore, what you've found, how you've had to do it. Do you do it online? What's the sort of criteria? It's all about sharing these unique situations that we find ourselves in. So I really encourage you all to jump in there. As I said, we'll be checking it daily.
Well, maybe not daily at the moment with everything you can. I haven't been, but normally in a normal course of events, we'd be all over it. But yeah, we're maybe lagging slightly at the moment with that, but we're doing our best to get on top of that with everything else that's going on. But you can see there, you can search Superior Accounting Group VIP or follow the link that's on here to become a VIP through the Facebook group for our clients. Whoops, I encourage you to do that. Now, for all our clients too, as I've already discussed, we're going to be getting in touch shortly to start booking you in for your one-on-one sessions, which is why we're not doing this till not starting the booking process until next week, because we still want to give the next few days to see what other things get thrown at us. So at least we can have a webinar on it and you guys can then know all the general stuff. And then when we have the one-on-one session, we can get right into your stuff, nitty-gritties. Now, but what we're wanting is to start the booking process. Before we can start the booking process, we really need you to help us with answering 3 very quick questions, which will take about 15 to 30 seconds, depending on how fast you are. For me, it'd be 30 seconds, and for other people, it might be 10 seconds.
It's really just designed to see whose business is where at the moment. So who's actually had to shut up shop, who's had to reduce business by 20 or 30%. So we can sort of create a bit of an order of who we need to get to first.
Well, the 3 questions.
Yeah.
What are the 3 questions? Tell them what the 3 questions are.
What 3 questions are?
Well, it's, well, hang on, I'll get online.
Hang on. There will be another questionnaire, guys, that we will be putting together for you that will come out when we're going to slot in your phone calls, and it will be asking you for more of your specific information. So we will, you know, like our normal tax data collection form sort of scenario, we'll grab as much information we can from you so you can get the most value of our one-to-one sessions.
So the form's called the snapshot form, and this is how little you have to put in. Your name, so we know who it is. Is your business still operating? Yes, no. What percentage capacity are you operating at? And do you have access to other funds outside the business? Yes, no. Hit submit. That would seriously take 15 seconds. And we want everyone who's one of our clients to do this, because as you can imagine, and I explained this to someone today, and Nita's already touched on it, if someone's still running at 50% versus someone's totally out of business, we've got to get to the totally out of business clients first, because they're, as you can understand, screaming for as much as they can get because they've got nothing happening. And so we're trying to prioritize logistically to help, because we've only got so many man hours and so many people that can do things. And I think each of you will understand, if you sit back and look at your position, you would appreciate if you've got 0% capacity at the moment as you're not working, you're going to need more help than someone who's at 80%, right? So that's the logic behind that. So I encourage you all to fill that in as quickly as possible so we can start the booking process happening next week. Oops, hang on. Now, we touched on this earlier. We've got a webinar tomorrow night, 6:30 p.m. Melbourne time. It's basically the guys that we use for HR advice and ongoing advice is a company called EmploySure. Now, they're getting hammered with questions and issues in relation to employment, as you guys can probably imagine. In this uncertain time, do I hold someone? Do I sack them? Do I stone them down? Do I make them redundant? What do I do? What are my obligations? What processes and systems do I need to follow? You've still got to dot your I's and cross your T's because you can still be potentially sued by employees if you don't do the right things. Well, they're having a session tomorrow on that.
So you can have all your questions answered.
And I'm hoping that they're going to be covering, basic stuff together with some questions they've been getting, so you can get an idea and you can ask your questions on that call. And I'll be there if there's any tax ramifications. But to register, the link's on the screen right now. And we hope that guys can all be there tomorrow, because
there've been questions that we've had and they've covered, they've tripped over both this us tax and this, so it's sort of. And
we've been getting some questions in this space, and to be brutally honest, we can't go there because yes, we might be able to have a go at answering it. It's not our forte. It's not our bread and butter.
But they're our go-to guys for this.
And
this
therefore,
is part of our support.
You go to people who do this for a living. I always say, go to specialists who do things for a living, right? So we won't go near that for that reason. Go to these guys or someone else that does that for you. Get the right advice before you take action to avoid any unnecessary headaches.
As we said, we're just sharing our team that are here supporting us. We just want them to be able to support you guys as well. So we are supporting each other.
There's our details, our website, our phone number and email address if you want to get in touch with us. And now what I'm going to do, so anyone else that doesn't want to hang around for questions now, please feel free to go. And on doing that, I say one thing before you do go. A copy of this webinar will be emailed out to you probably tomorrow. No, definitely tomorrow. And it'll be on our website definitely tomorrow as well for download and watching. I encourage all of you to go back over this. It's a very content-heavy webinar intentionally. Well, not intentionally. We had no choice. But because I've had to go at a quick pace, go back over it and grab the areas that suit you and listen to them again and digest them a bit more when you've got more time and more leisure. So thank you for giving up your valuable time, and I really do appreciate that.
Once again there, guys, we're happy for, we're doing this. We're doing this for our clients and for the broader community. Share it. This has got information that it can help others. Put it out there. It is not a problem. It's really all about just supporting each other. And
getting this knowledge, because there's a lot of people going, I don't know what to do. I don't know what I can do. I don't know my options. There's all this stuff flying around and it's all confusing. And at least the series of webinars we've run are general information that if everyone watched them, they'll have a pretty damn good idea what they're entitled to. And then they can seek appropriate advice from an accountant and advisor who understands this to the nth degree.
And trust us, we're going to be doing some more next week, more with our team that support us, a little bit lighter topics than the heavy government ones, but there are still some areas that they have put out in the stimulus package that Adrian hasn't actually covered yet. And we will be doing that in our upcoming webinars. Won't be tomorrow night's one, but it'll be next week.
And we've done, as I said, the 3 webinars we've done have been about accessing monies, stimulus and government. Tomorrow is about getting HR advice, so you do the right things and don't do things that come back and bite you in the bum. They're all the real urgent stuff. There's some other things, as Nita said, we're going to cover next week and have webinars on that aren't as urgent.
Hold on, but I'm sorry, I'm going to argue. My one's urgent. That dirty B.
Budget. Yeah, we're going to be having one on. We're going to be having one on knowing your numbers. So in other words, knowing what your bottom line is for your business. And
what is that number that you need for you personally and your business to survive?
In this period of hardship and trying times, you need to know your exact numbers personally and professionally. And we're going to be running something on that next week. And I agree with you, I forgot about that. And the other webinars are going to be just little things that help support all that, but not what I would call massively pressing.
But they're our team. These are the guys that we've gone to and asked questions of.
Yeah.
So like, I can tell you right now, next week is going to be our insurance guys, and we've got really curly questions because we're all now working from home. How's that covered with OH&S? How is our insurance covered? There's lots of like.
And what insurances are you cover? How does the pandemic affect your normal insurance, business insurance, risk insurance, life, TPD, trauma, all these sorts of things? They're going to cover those sorts of things. And
we have one of our clients coming on too, Tracy, who is a psychologist, and she's going to be giving us some advice around our mental health. It is really, really important, especially as business owners, that we look after ourselves during these periods. We have to look after our employees. We have to look after our families. We have to look after our employees' families. It is so important that we look after our own mental health. So she's going to be coming on and sharing a few tips and tricks with us. Yeah, I think that's it. You want to go back to some questions?
Yeah, and now, so thank you, everybody. And I'm going to go back to some questions because I had to skip over some of this because we were just, I wanted to make sure we covered.
I think I skipped over.
Yeah, that doesn't matter. No, it doesn't matter. So I'm going to quickly go through these while I'm sitting here. Cash flow stimulus. So with one of the stimulus, you are eligible to get 10 grand, which is under the stage 1 for employing people. You might be eligible to get the 10 grand and still get the Jobkeeper. Yes, you can potentially get all of these. You can potentially get stage 1, stage 2 booster, the Jobkeeper and super and loans and deferred loans and all these things. You potentially do all of them. That's where it comes back to working out what you need and
that's why you need to know your figure.
And we will do a lot of heavy lifting and help you do a lot of these things where we can. We can't always do it. We can't contact your bank about varying your interest and all that. We can't. But we can deal with the ATO and we can do a lot of the other stuff that we do as part of it, right? Now, next is, that's fine. We've covered the $1,500. I think it's going to be taxable. Now, there was something here. Someone's written about poor old casual staff, and I actually tend to agree to a point. I know for a fact that obviously you're okay if you're a casual, but only if you've been a casual for more than 12 months. So by definition, you know, not necessarily will casuals be on for 12 months or more. And there's potentially the casuals are going to suffer because they're not going to be getting any benefit for the casuals who have been on for less than 12 months. Unfortunately, that's the nature of the beast. Now, someone's asked about sole traders and employees. Sole traders are still eligible to get things. I covered before self-employed with no employees. You at least get one person who can get the Jobkeeper. If you're a sole trader with employees, you get eligibility for all of those people potentially where you've got the 30% drop. Doesn't matter that you're a sole trader. If you've got staff and paid them wages, you're going to be potentially eligible if you meet the 30% drop requirements. Trust distributions, I think I've already covered. You're not going to be eligible for the 1,500 Jobkeeper unless you draw a wage. Unfortunately, unless the government changed those rules. And we've covered Jobkeeper is not asset tested. Someone said I haven't covered sole traders fully. I think I have, because if you're a sole trader with no employees, you're going to be having one person who can get the Jobkeeper. If you've got sole trader with employees, you're going to get multiple employees potentially who can get Jobkeeper. So that's that. We've covered that. Okay, I think I've covered those. I've got a couple more in front of me. Someone has asked a question who's a client of ours. We've got a casual worker who joined us in January 20. She's been great and we'd like to put her on a permanent part-time as of now. But she's been a casual for obviously less than 12 months, but they'd like to put her on permanent part-time. And then they've said, is there any way we can retroactively place her on a permanent part-time and retroactively apply these provisions? Okay. The problem we've got with, there's a couple of things with casual workers. This might be something we have to have a one-on-one discussion with, but just in generic terms, by definition, casuals hours normally vary, right? So generally speaking, the definition of a casual is it might be 10 hours one week, it might be 15 the next, it might be 18, it might be down to 9. It's rare that a casual is the same hours every week. Now, if it is a varying hours, I think you're going to be hard pressed potentially to put them on permanent part-time, because permanent part-time is normally done a certain number of days or certain number of hours every week locked in. If your casual has been all over the place, I very much doubt you're going to be able to potentially even consider that. Now, if your casual was working the same hours every week, and hence potentially would have consistency with being what a permanent part-time employee is, then that's something we could go down the path and consider, but I wouldn't necessarily say it's guaranteed. Definitely, I would say to you one thing: if your casual hours were all over the place, you got no chance of even thinking about this in any capacity, because it's not going to stack up with a permanent part-time arrangement. I would suggest this person, you contact us individually and we have a chat about it and go through and explore all the nuances of this and cover off all sides of this, right? Now, on another level with that, the casual's only been with you since January. So the rules are 12 months, okay? The problem I've got is until they come out with some clarification on the practicalities of this, by strict definition, I would argue you're not going to get it because they haven't been with you 12 months.
That's right.
But if they turn around and say, if you've hired them and it's a pro rata, that might be a different scenario. But right now where we sit, we haven't had clarification of the practicality of that. So I would have to apply a literal interpretation of those rules and say to you that I would argue that you probably wouldn't be able to get it as a casual anyway, because they've not been there less than 12 months. So I suggest we have a chat about that, right? And there's another person who's also a client who sent something in about, 50 to 55% capacity in billings and write-ups and all that sort of stuff. I'm not going to mention names. You know who you are. I would suggest that you contact us and we have a one-on-one about that too. And the last one I've got here, I'm a contractor and my income's dropped 30%. I've covered that. That's a sole trader. If you're a sole trader and you drop 30% with no employees, you're still entitled to get the Jobkeeper payment. And if you're also an employee of somewhere else and the employer of that, as long as your wage has been consistent, I would argue you can potentially benefit from Jobkeeper in that capacity as the employer where you're also an employee. Now, let's see if anything else has come through. Oh, okay. Someone's asked for that link again to on our website. You go to superioraccountinggroup.com. You click on resources. You click on forms, and the form's called, where is it? Hang on, I'll go in there. Resources, then forms, and the form's called the snapshot form. So click on the snapshot form, fill that in, and get it into us. I encourage all of you to do that. And that's the end of my questions. That's the end of my webinar. I'm sorry it's taken so long to get through everything. It was content heavy, and I do applaud you all, those of you that have hung on for this whole time, which is the majority of you. And I appreciate that. And I'm sorry, I can't apologize for the content, because I've got to give you as much as you can so you can learn and start thinking about things at your end. But if you've got any questions or comments or anything moving forward, you know how to get in touch with us. Those details are on the screen right now. And for those of you that can register for tomorrow's webinar, I encourage you to do so, because I think that's going to be invaluable knowledge content as well for each of you guys to assess your HR needs on a employment level for each of your businesses individually. It's going to be, I think, really good content and really important content. And we'll keep you in the loop of any webinars that come up from here that we're going to have next week. But
thank you, Adrian.
Thank you for your time, and good evening. I bid you all farewell.
Bye,
until we speak again.
Stay healthy, safe and happy.